Imagine a world where Solana isn't just another top 5 crypto, but the actual backbone of the entire global financial system. A world where Wall Street trades settle not in days, but in milliseconds, all happening on-chain. Now, that might sound like science fiction, but it's the very core of an ultra-bullish case for Solana that we're going to break down today.
And it's not just a dream. Investment giant VanEck actually put a number on that future, a potential price of $3,211 for a single SOL token by 2030. Now, to put that into perspective for you, from where it is today, that is a mind-blowing 25x return. We're talking about a true millionaire maker scenario.
But let's get a reality check here. The market hasn't exactly played by the rules, and even VanEck themselves had to walk back some of their shorter-term predictions. So what does that mean? Is the dream dead, or is it just delayed? Is this a credible roadmap to the future of finance, or is it just a multi-trillion-dollar fantasy? Well, that's exactly what we're here to figure out.
All right, so here's the game plan. First, we're going to look under the hood at the massive tech upgrades that are supposed to power this whole thing. Then, we'll dive into the economic heart of the thesis, this idea of it being a trading superpower. After that, we have to talk about the serious risks and roadblocks that could stop it dead in its tracks. And finally, we'll try to reach a verdict. Is this fantasy, or is this the future?
Okay, first things first, we have to talk about the technology. You just can't get to a $3,000 price tag on hype alone. You need world-class, bulletproof infrastructure that can literally handle all the money in the world. And that brings us to Solana's incredibly ambitious technical roadmap for 2026. And when I say ambitious, I mean it. The scale of this upgrade is absolutely massive. This is not just some small patch. We're talking about the network's finality time. That's the moment a transaction is 100% locked in and irreversible, shrinking from about 12 seconds all the way down to just 150 milliseconds. That's a leap from being fast for crypto to being as fast as the modern internet. And at the same time, it's moving from relying on just one software client to multiple clients, which is a huge step for making the network way more resilient. At the heart of all this is a new system called Alpenglow. Now, don't think of this as just an update. It's more like a complete engine rebuild from the ground up. It has two key new parts: Votor, which moves the voting process off the main chain to declutter it, and Rotor, which completely streamlines how data zips across the network. The result? It dramatically cuts down delays, it makes it way cheaper to run a validator, and it introduces a new security model that makes the whole network much, much tougher against attacks or outages. And then you've got FireDancer. Honestly, this thing is a total game changer for network stability. It's a second, completely independent piece of software for validators to run. Now, why does that matter? Well, it means if the main client, a gov, ever has a critical bug, the whole network doesn't just grind to a halt. It's like having a backup generator for the entire system. And as a little bonus, it's been tested at an absolutely insane 1 million transactions per second. This is how you build a network that big institutions can actually trust. So, with that incredible technical foundation getting put in place, now we can talk about the real heart of the bull case, this idea of internet capital markets. The thesis is actually pretty simple. Solana becomes the go-to place for global finance because, frankly, it's the only chain that's going to be fast enough to handle it all. And look, the economic traction is already here. This isn't some far-off theory. If you look at the fees being generated by the apps on Solana, its on-chain economy is already annualizing at over $6 billion, which has, at times, actually surpassed Ethereum. That is a critical metric. It shows that real users and real developers are flocking to the network, and they're willing to pay for that speed, creating a legitimate revenue-generating ecosystem. This new financial system is really being built on three massive pillars. First, you've got stablecoins. They're the lifeblood of crypto, and Solana is fighting to capture that huge market. Second, in the world of decentralized trading, it's already a dominant force. And third, we're seeing the tokenization of real-world assets, where big institutional players are finally starting to bring things like stocks onto the Solana network. And this brings us to what might be the most crucial point to understand about Solana's economy. You can't just look at how much money is sitting there locked up. You have to look at how fast that money is moving. There's a term for this: capital velocity. Just take a look at trading. Solana is handling a mind-blowing 30% of all decentralized exchange volume across every single blockchain. That's capital in constant motion, generating fees and real economic activity with every single swap. But, and this is a big but, look at the contrast. In areas like DeFi lending, where capital gets locked up for the long term, Solana's share is way, way smaller. just over 5%. This tells you a really clear story. Solana absolutely crushes it as a network for capital in motion. It's built for high-speed activity. It has not yet proven it can be the place where people park their capital for the long haul.
Of course, no bull case would be complete without taking a hard look at the risks. And for Solana, that path to over $3,000 is basically a minefield of significant challenges that could completely derail the whole vision.
First up, we have to talk about the elephant in the room, network reliability. Solana's early days were, to put it mildly, plagued by some major outages. Now, to be fair, recent upgrades have led to over 99.9% uptime, which is fantastic, but the memory of that instability still hangs around. Any future network halts would be a massive blow to the institutional confidence they're trying so hard to build. Second, the competition is absolutely fierce. In the incredibly lucrative market for perpetual futures, which is a key piece of modern finance, Solana has actually been losing ground. A competitor called Hyperliquid has swooped in and captured the dominant market share, shrinking Solana's piece of the pie from 17% all the way down to around 6%. It's a stark reminder that even with amazing tech, you can still get outmaneuvered. So, after looking at the incredible potential on one side and the really serious risks on the other, what's the verdict? Is that $3,211 price target a plausible future we're heading towards, or is it just another crypto fantasy? Well, the path to get there is pretty clear, but it's more like a high-stakes obstacle course than a straight road. Step 1, they have to launch those massive tech upgrades like Alpenglow and Firedancer flawlessly. Step 2, real, meaningful institutional adoption has to follow. Step 3, they've got to convince the market that Solana is not just a high-speed casino, but a place to build long-term value. And finally, they have to fight and win back market share in those key financial battlegrounds. Every single one of those steps is a major, major challenge. You know, in the end, this question is so much bigger than just whether Solana can hit a specific price. It's about whether any blockchain can make this leap. As Galaxy Research puts it, it's about turning this entire space from a parallel experiment into the infrastructure of the next financial era. If any chain has the sheer technical ambition to even attempt it, it might just be Solana. The only question left is, can they actually pull it off?